Well, here's the outcome of today's panel. It is to share some things that each of these individuals have done to take the next leap in their career as a commercial real estate professional and a syndicator. I think we're all syndicators here, and to help you, pick up some tips on how to do that for yourself. So I'll quickly introduce each of these people. We've got Chris Salerno. Chris Salerno is the founder and CEO of QC Capital. We've got Veena Jetti. She is the founding partner of Vive Funds. We have Kent Ritter. He is the CEO of Hudson Investing. And we have John Casmon, and he's the founder of Casmon Capital. So let's start real quick. Let's do 30 seconds or less overview of what you focus on right now.
Yeah, so Chris Salerno, QC Capital, based out of Charlotte, North Carolina. We primarily focus on Class A and B plus assets throughout the Southeast, including Texas and Nashville markets and prominent locations throughout those states.
We focus on large value-add multifamily assets, so basically the same thing everyone else is buying in Texas, Florida, Georgia, North Carolina, South Carolina, and Arizona currently.
So we focus on buying value-add multifamily throughout the Midwest, primarily Indiana, Ohio, and Kentucky. A little bit different in that we focus primarily on properties that are below 200 units, kind of a little niche, and really focus on big value adds, a lot of mismanagement, mom and pop owners, things like that.
John Casmon, based in Cincinnati, Ohio, and we focus on value add properties as well. Very unique. I think our focus is mostly in the Midwest as well as the Southeast region. And I think one thing that's a little different for us is we kind of lead our own deals, but we also partner with other operators on deals that they have as well.
All right, so this is about taking the next leap from where you were to where you are now. And I'd like to start with Kent. You were a W-2 employee? Was a W-2 employee?
Yeah.
How long ago?
I was a W-2 employee, actually technically, 9 months ago.
9 months ago. So you were a W-2 employee 9 months ago, and you have acquired, in the second half of 2021, so last year, you acquired 181 units for $19.3 million. Mm-hmm. So since you have made the jump from W-2 employee to now full-time, you've been busy. Yeah. So talk about that a little bit.
Sure. So I had a little bit of an interim step. My last W-2 job was working for a private equity firm, a large multifamily private equity firm. So it was kind of like, call it my real estate MBA, if you will. And so I was able to really, through that 15 months there, really gain just a fantastic education and kind of a baseline on how the big boys do it and the ways to do and not to do. And I saw a lot of good and a lot of bad. So that really was a great catapult, honestly. Made a ton of great relationships. And so when I came out of that, really the reason that I left is because I had these deals that I liked, these smaller deals that I was just going to the deal committee and getting told no to. And I said, well, screw that, I'm gonna go do it myself. And that's what I did. And so I did 2 deals in Indianapolis and then actually partnered with John on one of the deals down in Louisville. And so it was a busy 6 months, but been well worth it. I wouldn't go back.
John, when were you a W-2 employee?
2019 is when I left the W-2 job.
And what was the reason why you said, you know what, I'm going to do this full time? You were in advertising before.
Yeah. The short story is I worked for 2 companies that ended up going bankrupt. One is very well known, General Motors, and the other was an advertising agency. So in 2 times in my career, been at a job, company has folded, and I had no idea what was going to happen. In both of those instances, I continued to work for that same company. They changed some paperwork, and there was a new logo, and my checks cleared. So I actually never missed a paycheck. But that's enough to make you realize you can't depend on a W-2 job forever. What ended up happening to get me full-time in real estate is I really needed to make that leap because we had started doing some deals as kind of co-GPs. We had started building up some credibility. We bought a 28-unit building in Cincinnati. And from a family standpoint, we wanted to get closer to home. And when we moved to Ohio, the job I was working at, this is 2018 or 19, they let me do the remote thing for a little bit, and nobody really was doing remote at that time. So it was just easier for them to say this isn't working, which I knew and kind of anticipated, and this is why, kind of set up everything to make an easier transition.
What was surprising when you made the transition, and in terms of time spent, and what was a good use of your time and what wasn't? And that's for both of you too.
For me, I think realizing that just because you're busy doesn't mean you're being productive. And there's a big difference when you are an entrepreneur and running a business of the results of the time you spend. You can feel busy, whether that is talking to people and networking, and you feel like you're doing a whole lot of stuff. But when you've got a W-2 job, you can do that and hope the results come. When you don't have a paycheck coming in and you've got a business to operate, you really have to focus on the revenue generating activities. So that was the big thing for me, was just really stopping all the stuff I was doing and saying, where do we make money, how do we make money, and how do I spend most of my time doing those activities?
Mm-hmm. Yeah, you got to really narrow in on what is your highest and best use, and get rid of everything else, and pay people to do that stuff probably before you feel comfortable paying people to do all that other stuff. Because when nobody's telling you what to do, you can spend a lot of time doing productive or busy but not productive stuff. I think the other thing that is really important when you're an entrepreneur and on your own is a routine. You have to find a routine that's going to make you successful, and you build into that routine all those important things. Because if you do that in a programmatic way and plan your week out, like I literally have my week planned out hour to hour, then you know that you're spending time on those high impact activities. Otherwise, you get caught up in your emails and Facebook and everything else, and all of a sudden, your day's over.
This is for the group. As far as routines go and high impact activities that you do, anything comes to mind? Anything that comes to mind that you want to share? Like specific activities that you do that are high impact every day.
I would say I used to have 30, 40-minute meetings, and I realized that in those meetings, the first 5 to 10 minutes, we would just talk. That was pointless information. And so
they're just wanting to say hi and get to know each other.
We
warm
do.
things up a little bit.
I've learned that I can narrow that down to a 15 to 20-minute meeting. Now, it all depends on who we're with. If it's a new investor, 45 minutes to an hour I'll set aside. But if it's someone that we're talking on a deal or any information, I've narrowed it down to around 15 to 20 minutes for that meeting, and you're actually shocked on what you can get accomplished in 15 to 20 minutes if you have that time frame.
Yeah, I think for us, we put into practice processes to cut down a lot of the ancillary things that we don't need to do. So now, once a week, we look at the calendar and we start pushing meetings that aren't imminent or that need to happen, or calendar management has been a really big focus for us, again, to try to free up some of our time. As far as daily goes, we used to do daily check-ins every time we onboard somebody into the company. Now we've stopped doing it daily. We do it twice a week, and we try to save everything for those 15, 20-minute meetings, keeping them as short as possible. When we were in person, we would try to do more like standing meetings or walking meetings, because it's a lot harder to waste time when you have to be walking or standing. So those are definitely things that we focus on as well.
I think when you're starting off, probably just always, the two most important things for your success are going to be the relationships you have with investors and the relationships you have with brokers. Because the brokers are going to give you the deals and the investors are going to fund your deals. And Joe has told me this many times, if you have a deal, it solves all problems. And so I think that those are the things you really need to narrow and focusing on, is building really solid relationships with your investors and with your brokers in your market.
For me, I think it's just realizing that there are systems and processes and delegation that you can do. So it's more about taking myself out of some of these processes. I have an assistant who goes through my email Veena and I were joking because we both have a lot of unopened emails. If you look at the little iPhone icon, hers is way higher than mine.
You can't call me out like that.
Highest I've ever
Crazy,
seen.
it's crazy. But the thing is like, I honestly don't go through my emails as much as I used to. I used to sit there from corporate, it's like email all over. And what I do now is I check email a few times a day. My assistant goes through if there's anything that I didn't see that I need to reply to right away. She sends me a message to go through it. So I can just use that time to be more productive of either networking, talking to investors, talking to partners, and just make sure I'm being more efficient.
Veena, this time last year,
Yeah.
where were you at from a milestone standpoint, whether it's acquisitions or money raised, and then where are you at now, first off? And then I'd love to hear more about how you got to that point.
Yeah, so this time last year, we had just closed on our largest deal to date. It was a deal in Marietta. We bought it for $80 million in October of 2020. And then today, where we are, since then, we've done 2 other deals at right around the same deal size. I think we've lost a couple deals to you, Joe, in the process. We also launched Rev Fund, which is our $100 million diversified asset fund. We have 2 assets in that now. We're getting ready to put hopefully 3 or 4 more if we can find any deals this year, and then close out the fund this year.
And so you've closed on multiple deals over this past year. It's been hard to find deals.
Yes.
And it's been hard to win deals.
Yes.
For everyone here.
Yes.
What are some things that you've put into place that have helped position you for those 2 deals in particular to win those deals?
Yeah, so I think we are not winning right now on pricing. It's very tough to compete on pricing. So we're really winning on the terms of our deals. So we are well capitalized. We're closing very quickly. We're shortening due diligence. We're shortening our financing period, and we have no extensions. So we're like drop dead after 42 days.
And what gives you the confidence to pull off that condensed time frame relative to what others are likely suggesting that they'll do?
Oh, I don't have the confidence anytime. I'm terrified every time that we're not going to close it. No. Once you do it once, it gets easier the second and third time. So anytime you're doing deals, the first deal is always the hardest, and it gets exponentially easier as you go through your career because you get better processes, systems, you know what works, what doesn't work, you see pitfalls before you actually fall into them. So I think it's just getting better every time. We do a meeting after every single deal we close, and we talk about what didn't go well, what we could do better, what did go well. So I think that's kind of how we've built that confidence. But I mean, every deal, I'm like, are we going to get there or not? But we're also capitalized that we're ready and willing to fund it ourselves, or be able to pivot by bringing on strategic partners.
Chris, let's talk about the last deal that you closed.
Yeah.
Tell us what it was, how you heard about it, and what challenge or challenges might have come up.
Yeah, so the last deal we closed, we got it off market directly through the brokers. The great thing about living in Charlotte, if you're focused in the Carolinas, most of the brokers live in Charlotte because it's in the middle of the Carolinas, and then they commute to the other states to tour properties. So through our broker relations, we were able to acquire the deal, and from there dealt with a very difficult seller. But we were able to get through with it, and we actually got an offer a couple weeks ago for our projected 5-year hold just within over a year of holding the deal.
And when you take a look at that deal and you take a look at the other deals that you've acquired, what has been the most challenging part of those deals, whether it was post-acquisition, something happened, or during the acquisition process, a building burned down?
Yeah, I think we went from the transition of the 1980s and high 70s and 1980s type of product to early or to 2000 and present type of deals, and we've really noticed during the due diligence it's a lot easier with the newer type of product because it's your tenant demographic, your lease audits are a lot stronger, and so we found a big difference during our due diligence with focusing on newer type of assets. It's a lot smoother and less of a headache with the older type of products.
John, HUD loans, you like them?
No.
Tell us about your experience.
So we had a deal in Florence, Kentucky, and this deal had fallen out of contract a couple of times. And it's one of those things where I think in this market, if you're looking for opportunities, you want a deal that's either mismanaged or mismarketed, right? So this was one that was a pocket listing. It had been listed, fallen out, and we fell in love with the deal once we ran the numbers. There was a HUD loan in place, so initially we looked at assuming the existing HUD loan. The numbers just didn't work out. The seller said, hey, well, listen, why don't you go and get a new HUD loan, use our guy, it'll be great, we'll wait, I know it's gonna take a little extra time, that's fine. We said, great. What are we talking, 6 months max? Great. We go through the process, and has anybody ever done a HUD loan? No? You? All right, why didn't you warn me then? Anyway.
I think you did it before me.
Yeah, well, the issue is they have a lot of red tape to get through. And one of the things that came out at the very end was they wanted us to change how much money we put down, and they wanted somebody on the team who had also done a HUD loan before. This was a new requirement that we weren't aware of. They could have told us this 6 months earlier. So because of that, we ended up scrapping that completely, and we pivoted. And I would not recommend a HUD loan unless you plan on holding a property 20, 30 years yourself.
You attended the first Best Ever Conference?
did,
You
yeah.
attended the first Best
I
Ever
got a
Conference.
6, so my thing's down there. But I
And
got the 6 right.
your first syndication
Yeah.
partnership resulted from that. Can you talk about your approach when you first met that person or those people, and just share,
Absolutely.
so that should others want to take that same approach, we have a blueprint.
I think first and foremost, I want to acknowledge, Joe and the team for putting on such an amazing event, right? I've watched this event grow year over year, and there's some great people in the room. If you're looking for partnerships, this is the place to be. At that very first event, I met the guys at Wildhorn and RSN Capital, and really my wife, give her all the credit. She was here, and she just grabbed me and said, hey, we're going to go do dinner with this guy. And I'm like, who is that? And why are we doing dinner? Do you know, dinner is a prime
That's a
thing,
lot.
you know what I mean? That's like the networking. We go from coffee to dinner. That's
Yeah.
like really building it.
Committing.
I don't even know this guy.
A long time.
We went to dinner with him. We had a great time. Great connection with him. Tall kid from Austin. And, we just built a relationship. Fast forward 7 months, I was launching my podcast. I was looking for guests. He's literally episode number 2. And I had him on the show, and afterwards we were just chatting and told me what he's working on. And at that moment, I had been looking for deals. We had a hard time coming across deals. And I said, listen, I've got investors who are looking to get in. I can help with marketing. I can do some other things. Let me know if you need help. He said, great. He got a deal 2 weeks later. He said, hey, we got some private equity coming out, so don't worry about it. He called me a week later and said, hey, man, you still interested in helping out? And I was like, sure. So we ended up partnering with him on that deal. And that really launched us, because prior to that, the largest deal we had done was an 8-unit deal with our own money. We had never raised capital before. We had only done our own deals. So from that Best Ever Conference, we sat, got to know this guy, and then have a little time to watch him, get to know him a little better, having him on the podcast. We really felt like there was a strong bond and somebody we could work with. And we actually just went full cycle on that deal last month. So.
Nice.
Ken, in your notes or during our conversation before talking about this panel, you said capital raising, it's harder than you think at first. Mm-hmm. Talk about what happened at first and what you did to solve what happened.
Sure. And I don't know if you know this, but I actually met the group that I did my first deal with at your conference.
Wow.
So there you go. Proof point number 2. On that deal, so I tell people, I wasn't driving. I sat shotgun in that deal because the group I partnered with was much more experienced. But it's probably the best way to get started, is to have somebody that's more experienced than you to help you through the process. On that deal, one of the roles that I was playing was to help raise capital. And I fell short of my goal. I only raised half as much money as I thought I was going to raise.
What was your goal?
500,000, and I raised 250. And the reason that I failed is that I hadn't done all the pre-work. Veena said something yesterday. You don't, what did you say? Say it again. It was a great quote.
I said you raise your capital between your deals when
Yes.
you don't have a deal. Otherwise, when you have a deal, it's just too late.
100%. And I had done my work with my friends and family to really changed their perception of who I was. They saw me as the guy they played football with in high school, their fraternity brother, their nephew, their whoever. And I had another business and sold another business, so I had a fair amount of success, but not in real estate. And I really underestimated the need to really change people's perception of who I was and what I was doing, and also really to display my expertise and do that well in advance of asking them for money. And so what I did after that was, and with some pushing from Joe and others, I started a podcast. I started putting myself out there, going to conferences, but I also started, I didn't have a deal. Well, we had that deal, so I basically used that deal as an example for others and say, here's a deal we did. If I brought you a deal like this deal, is it something you'd be interested in, right? And I did the whole pitch for him, and it helped me practice too. And so anyway, what I tell people now is, if you want to raise money in 6 months, you need to start today with your network.
Veena, what's it like being a woman in this space and building a company as a woman-led company?
It's definitely challenging because this is a male-dominated industry. I think it's especially hard if you have kids because you're oftentimes the default parent when the nanny can't come in or a kid's sick and has to go to the doctor, and especially if you have flexibility of running your own business. So I think it's definitely more challenging. I think sometimes people don't take you as seriously, but I think there's a lot of pros to it too. I think now there's been a lot of social focus on, promoting women in these spaces and minorities in these spaces, and I think that has really helped, helped us get to the level that we're at. The last 3 deals, last $250 million that we did was actually a JV with Ellie Perlman, who's another woman-led company. And so it's actually been really fun because it's the first time we've ever done multifamily deals where both companies are led by women. And it's so rare, and it's really great to be able to work with another woman-led company. I think our communication styles may be a little bit different, and how we kind of approach deals is maybe a little bit different.
Chris, who was your last hire?
Last hire was our investor relations associate.
And who was your first hire?
First hire was now my managing partner, Elijah, our underwriter.
So how did you choose who to hire first?
So he actually found me. I was headed to Dallas around 2.5 years ago for a conference, and I post on my social media, I'm headed to Dallas, would love to connect, and he actually found me. We were going to go to a steakhouse, and he came from Reef Holdings out of Dallas, Texas, a very large, prominent private equity firm where he managed a little over 200 million assets, both hospitality and multifamily, and he was looking to switch. He was looking to get out of Reef Holdings and looking to go ahead and really start his own thing from a company from the ground up. And so my Uber was late, and we were going to a steakhouse, so he happened to be driving by, so we ended up going to In-N-Out Burger, which I always like to go to In-N-Out if I'm in Texas, because we don't have that in the Carolinas. We had a great conversation. He actually worked for me for free for about 5 months, so I can test his ability. And he came from Reef, and when he managed those assets there, he only dealt with terrible assets. So he dealt with the assets going south, dealt with sponsors that projected wrong returns, and he had to communicate that to investors. He dealt with the SEC based off sponsors. So when he analyzes a deal, he analyzes it from what's worst case scenario about this deal, which I like his perspective when he does.
And how do you, maybe it wasn't convincing, but how do you attract someone to work for you for 5 months for free?
Yeah, I think it was really the educational content I posted on social media. At that time, I was doing everything. I was raising capital. I was underwriting. I do not prefer to raise capital, I do not prefer to underwrite. I love raising capital. That's my strength, and that's what I do within the company. But when it comes to underwriting, I am not the type to put the formulas in the Excel spreadsheet. Don't ask me to do that. I know how to move the levers to get what we need and to see the numbers. And so he knew that that was my weakness, is underwriting, and that was his strength. And so that's why we work so well together, is when you sit him behind a chair in an Excel spreadsheet, he's created our model from scratch, and he just does magic like I do with raising capital for the company.
Does he get equity in deals?
So how I've structured it with him is he is a managing partner, and any managing partners in the future who get brought on gets profit share. So they get profit share of the company. After all expenses are paid, marketing, employee salary, everything, he then gets profit share. That profit share is calculated into a formula into equity of the deal, because I want him to get the benefit of the deal, the tax benefits. So we've calculated a certain percentage of each deal based off of the amount of profit share he gets throughout the deals. And we're also structuring, moving forward, an employee fund where our employees will all now be able to participate in our deals. So I'm still working the kinks on that, but I want all of our employees as a company to be able to have the ability to participate in our deals through like an employee fund.
For each of you, first hires.
For me, it
Yeah,
was,
sure. Veena, you wanna go
for
first?
me, it was admin. Bringing on admin it's easy to bring them on, right? Because they are a lot of times doing automated tasks, things that you can put very specific SOPs in place, and you don't need a very specialized skill set. You can find admins virtually, or we have one that's US based, but that was definitely my first hire.
What's the compensation? Annual?
So we pay an hourly rate to them. We do bonus, so every time we close a deal or we have a big exit, we always bonus. Everyone in the company gets a bonus, so everyone participates in the wins. Are you asking like what the rate is hourly?
Yeah, like how much, after 12 months, how much does he or she make?
Yeah, so we paid like $25 an hour plus bonuses.
Got it. Okay. And how much bonus money approximately per year?
Yeah, so depending on how many deals we're closing in the year, we're bonusing her anywhere from like maybe about 10 grand over the course of the year.
Got it. First hires for Ken and
Admin.
John?
Admin was mine too. I think that's where you get the most leverage initially. We talked about highest and best use, right? And a lot of those admin things are not that. I mean, really similar from a comp standpoint. It's $30 an hour, so don't get the word out. Yeah, but I also bonus everybody on the team same way on each deal.
Yeah.
John?
I started with a social media and content manager. So for me, I looked at how I was spending my time, and especially if you're focused on raising capital, a lot of it is, trying to generate leads and doing a podcast. So that was the biggest thing. So I actually started with that person. I started with them about 20 hours a week. I believe I was paying like well over $15 an hour, something like that.
How'd you find the social media and content
I
person?
actually took her. I saw someone else's content that I liked, and I reached out to them. I said, "Hey, your stuff looks great. Who does it?" He told me he does it. I reached out to that person. That person said, "I actually don't do it. I outsource it to this person." I said, "Oh."
Nice.
Then I reached out to that person and hired them.
Nice.
For anyone that this comes to mind, you're speaking to someone out here. They're just getting started in the space, but they have some professional success in whatever industry they're in, and they say, "I'm going to focus on X," and you think that's going to be a waste of time. What would that be? What would be a waste of time?
That's a good question.
know.
That's like hard.
You always ask good questions.
For me, because the way I think is I will often think 5, 6 steps down. So I think it's a waste of time to do that. I think, like Joe told me, focus on getting a deal. You get a deal, the other pieces will come together. Don't worry about what's going to happen and how you're just get the first deal. That'll get you started. Everything will come together around that deal.
I would say that, this business is really simple. I mean, we make it very complex, but it comes down to deals and money. And you're always looking for those two. There's operations as well, but you can't get in operations unless you have a deal and the money to get that deal. So if you're starting out and this is your first go at it, you need to figure out, are you going to focus on getting the money, or are you going to focus on finding the deal? The other things you can figure out. Don't look for an attorney and a CPA and all these other people. You got to focus on finding the deal or starting to generate money.
Cool.
Yeah.
Good.
Yeah.
Yep. All right. That's it. Thanks, everyone. Thank you for it.